All right, hope everyone's doing well. So let me kind of adjust a few things. Here is a question I was asked on the brookspriceaction.com website, and I believe I posted actually in the disclaimer of my YouTube videos if you ever want to find it. And if people, I like answering questions, and I have not made a video in a while, and that's primarily because I've been spending the majority of my time looking at Al's new video course and really just studying that. And what I've been focusing on, just a little hint or a tidbit for anyone that is trying to study the course. One advice I would give is to watch the video, each video, of course, and focus on the PowerPoints and try to learn the PowerPoints. If you can, spend more time focusing on the PowerPoints and as well as the main bullet points. But anyways, the reality is it's just a lot to learn, it's a lot to watch, and it just takes a long time. But you can get there. Here's a question someone asked again. This person asked on the Brooks price action. It's probably easier. It's easier if you wanted to ask me a question, the easiest way, or get a hold of me, the easiest way is through the Brooks price action course, brookspriceaction.com. And that's just because if you email me, you can email me. My email's in the description. However, there's a chance I may miss it. I might not see it. But I know, generally, obviously, all the messages on the price action on brookspriceaction.com is just trading related. So anyways, let's get into this question. Hello, I hope everything is well for you. I was wondering if you could provide your input on the chart attached. I sort of surprisingly got burned, but not sure if there's a better way to handle it. So let's just take a look at what they did, and I will show you through TradeStation a better example, or just more in depth. They said they entered long at the close of bar 1, which is this big bar, with the assumption that it was always in long. So full breakout, always in long, probably more up. And they said strong breakouts and plenty of room to the top up here. I would assume a measurement up. So he's saying the top's the red line. That is correct. And they would, okay. So he put his stop below the breakout bar here. And well, let me back up real quick. He says that, so he bought here, betting this was the top and we'd reach it. Decent follow through. He put his stop below here. So he was expecting at least a micro double top for his first. Okay, so he was expecting at least a second entry short or micro double top to form, and the first reversal down would fail. He says, however, this person says, however, the reversal took place in the highlighted area in red, right here, and it didn't look strong, so he relied on his stop below the breakout bar here. Every bear bar had bad follow through, so I was expecting a trading range by the bears at best. However, it continued down and hit my stop. Was this a reasonable thing to do? Also, should I exit on the bear breakout bar too? So should he exit here on this bear breakout bar? But it had bad follow through here, so he didn't expect a reversal. In other words, he expected trend resumption up. What would be reasonable management? Okay, so let's look at TradeStation. So what this person did is they bought this bar right here. So they bought here at 4 a.m. And they said, okay, good follow through. This is pretty disappointing on the way down. There's no big consecutive bear bars. So probably we should hold below here and test up. Well, there's a few problems I have with this. Number one, what's the market cycle? Think back to Al's videos. Are you in a trend or are you in a trading range? Well, what do I look at when I see this chart? So I see a big move up, so a trend up. But wait, then we have a trend down. Now we have a pretty big swing up. Now we have a swing down. Now we have a big move up. Big up, big down, big up, big down, big up. Big up, big down, big confusion, trading range. So when I look at this chart and I zoom out, the past, ever since September the 19th, really maybe even since September the 14th, we have been in a large trading range all the way through here. So what do I think? What do I think we're in? We're in a trading range. One of the problems is this is kind of like a second leg trap, and I'm not going to explain everything. If you really, for those of you that have Al's course, look at the bullets that talk about second leg traps and go over that. So, what's the always in direction? If you buy right here, if you buy here, first, yeah, like that more. Well, 1 second. It's not going to matter. Anyway, there we go. So, if you buy right here, what's your goal? Are you expecting price to reach up here? And you said you were, and you put your stop down here. And, it's reasonable if you get a strong breakout with follow through, which you did. If you're in a bull trend, it's reasonable to put your stop down here. However, look at the left. Are we still below major highs? Yes. So here's a major high. We are still below it. So we could be getting some sort of bear channel. So when you see this, you have to be thinking, okay, it's very possible that we get something like this. And we just melt away. So you've got to understand, you have to be very cautious of a strong breakout that is not above major resistance. Look, 2 legs up. The market in a trading range, you often get second leg traps. So here's a leg 1, pull back, leg 2. Leg 1 up, pull back, leg 1. And very often, the first move up comes before the end of the 2 legs down. So I kind of see this as a second leg trap, not so much with leg 1, pull back, leg 2, but more so with this rally pull back to here. So I know it's hard, but you've got to understand that when you get a breakout, look over here. Big bull bar, decent follow through, but then you see this. That's a problem. Then you see another bear bar. Well, sure, the first reversal up may fail, but once you see this bar, it's game over. This is bulls giving up. Yes, why'd we get the deep pullback? Well, it's because it's still confusing. Buy this close, they tried to buy more above here, and they couldn't even get to their average entry. Other traders, they want to sell 50% pullback. So leg down, they sell 50%, stop up here, you get a second leg down. So when you're in a trading range, you've got to remember that this may be some sort of broad bull channel. So 2 reversals down, reversal down here, reversal down here, draw a parallel. Look what happened. No surprise. If you draw it like that, I would not. But anywhere over here. Now, so what is this? Is this kind of a second leg trap for the bears? So leg 1, pull back, leg 2, second leg trap? Well, sort of, but my only problem is this channel down so tight that the first reversal up will fail. So would I, if I was short, would I put my stop up here? No. I would probably have my stop more up here. Now, since we're probably in a trading range, what am I going to say? Well, I would want to get out somewhere down here. So if we get a bull reversal bar, I probably want to be out of shorts. And the reason for that is up here, same thing up here. Down here, when you're in what appears to be let me put it this way. Sell off, probably always in short, strong enough reversal or trend line break that it's a major trend reversal. Yes, but we got a deep pullback. So this may be something more of a broad channel. If this is a broad channel, I want to buy in the bottom 2/3. So I want to, here's 50% of this prior bull leg, somewhere over here. I want to buy somewhere from here lower. Ideally, I'd want to buy a little below, 50% at best. I'd want 50% pullback. I'd want to buy below it, somewhere in here. But this is so tight. This is so tight down that it looks like this on a 480-minute chart. So let's look at it like this. So here we have a large trading range. The bulls, they want some sort of bull channel, but I don't think we're in a bull channel. What I think is more likely is this. I think we're more likely in some sort of possible bear channel. The problem is you don't really know where the bottom is. If I zoom out far enough, and here's a few reasons why I think we're more always in short and in some sort of broad bear channel. And that is just because if I go to look at a daily chart, we've been rallying up for so long that what's more likely? We have an open gap here, and I'll still answer this person's question about trade management in just a minute. But I want to kind of collect my thoughts. So we have an obvious gap. Now, with that said, measure move up takes you basically to this gap. I just think it's more likely that we close, that this is not a measuring gap from these highs over to here. So I think we're going to go lower. But I don't know how much lower. So again, I think we're always in short, but not by much. So if I took this buy, how would I manage it? Well, there's a few ways. Number one, look to the left, trading range. And when I see this, good follow through, good follow through, good follow through, and then we suddenly reverse down, I'm thinking, uh-oh. You've got to wonder if this is a second leg trap. When you're in a trading range and you see, let's find a few. Let's scroll way back. Here we go. Strong breakout, pull back, another strong breakout. Well, two legs down, and then reverse up. How can that be? Or we reversed up because it's a second leg trap. And sorry, give me 1 second. I'm really kind of trying to think about how to collect my thoughts here. Here's why second leg traps fail. And that is, it's the market cycle. Let me go back to over here, to your example. We've been in some sort, we're trying to get a bull rally. So we've been trending up, so to speak. Even though it's not really a trend, it's more of a, we've been going up for 20 bars since here. Trying to start the market cycle over. Typically, moves get weaker over time, not stronger. And Usually, the reason you get second leg traps, in more simple terms, is in a trading range, price gets drawn up to resistance because nobody wants to sell. If nobody wants to sell, what's going to happen? Well, what's going to happen is price is going to get sucked up to an area where bears find value. So, just think about it. Let me get rid of all these lines and put it a different way. Let's go to a bar chart. So, over here, we can see we've been in this trading range. We broke to the upside. We're going sideways. You can see anywhere in this area, let's just say 134.000, there's been sellers. There were sellers up here. There were sellers up here. 2 legs up. What's probably going to happen? Well, a lot of bears know, hey, if I sell up here and put a stop up here, it'll probably go down here before it goes way up here. Trading ranges, when you're in a trading range and you're around the middle, that's basically 50%. It's about as best as it gets. So when you buy here, 50% chance you go up to here before you get onto here. When you buy up here, it typically gets worse. Now, sometimes it will go up here, but the whole point is you got to be concerned when you're buying high up in a trading range. Now, what's the top of the trading range? Is it here? Is it here? Is it here? I don't know. No one really does. A range implies a zone, and it implies some sort of channel. Now, the reality is this is kind of like a large major trend reversal. Maybe I can show this better on no. Well, and this will work. I think it's basically a head and shoulders top. Every trading range has a double bottom, in this case double bottom bull flag, and a head and shoulders top. So what I'm saying is every trading range has a trend reversal pattern, which would be the head and shoulders top, left shoulder, head, right shoulder, and a bull flag, which would be a trend resumption. So trend reversal, it's a lower high major trend reversal. So here we're in a broad bear bull channel, trend line break to a slightly higher high, sell off to a lower high. You can basically call this a perfect double top and say that, okay, it's a double top, it's a major, here, lower high major trend reversal, maybe with the bull, maybe the bears get their 40%. What I'm saying is typically when you're at the top of the trading range, 40% chance this happens. And when I say this, I'm implying bears sell below here, stop up here. This was not likely. To a degree. I want to be careful with me saying that. It was not likely to put your stop below here, to sell below this bar, stop up here, and get this. What was more likely is this failing, you get a second leg up, and then a reversal down. Now, and what about the traders who were selling? Oh, okay, let me, because I'm trying to think through all this. What I'm trying to say is this. The odds favored bears. I think the odds here favored price reaching here. I do. However, when you get this, it's less. And what does this tell you? Well, this is telling you the bulls are failing. So do I think it was okay to buy here? Yeah, I do. I do think it was okay. I think there was, that really wasn't I think it's an okay thing to do. However, the bulls buying here are aware of the possibility of a second leg trap. So if they're buying here, they're going to be quick to get out. And maybe they get out here, I don't know. But here, it's a give up bar. So, so yeah, I mean, I don't have a huge opinion about it, so to speak. I guess, I mean, you can think about it this way. Here's my problem with holding for not getting out quickly if you take it. What's your risk? Okay. So your risk is from this close to this low. Target's up here. Okay. If you buy here, put your stop down here, that's your target. Well, at some point, your target gets increased to here. So if you buy here, and for simplistic sake, let's just say at this close. Right now, at the close of this bar, you're betting 1-to-1 puts you up here. So the math's not really good. In other words, it's not the same as this. They're different trades. And what I'm getting at is this is early in a move down. This is late. Did the trend start here or did it start here? I don't know. But you're easily 20 bars within a trend, so, or within a move, which lessens the chance of, it increases the chances of some sort of exhaustion bar. So I hope this makes sense. Let me know if it doesn't. And I'll start making more videos very, very soon.